Okay, hey, welcome everybody. Today, as we talked about, as I announced in the Doom, that we will be talking about how to predict sectors, find opportunities, how to predict the market, and what are the leading economic indicators we should be looking forward to uh, as I would say as we move forward and navigate the market on our own. And it is a very mind-boggling question people ask. How do you predict something? Uh, how do you know that today housing market will crash, or how do you know that this market will crash, or this something like this happen? And my simple answer to them is, well, there's a chart I know which I looked at, and I think it's bearish. I think it's bullish, and that's the gist of it, right? But today we're going to go through some economic indicators too, like PMI, CPI, non-farm payrolls, and those are leading indicators of the economy. So you can pretty much. I like PMI better. For example, if you don't know what PMI is, PMI is known as. Hold on, let me get the correct definition. PMI, so I can share that with you. I just call it the purchases purchasing index. The real name of PMI is Purchasing Managers Index, and it is a leading indicator. Then there's CPI, which is Consumer Price Index, uh, which is also an indicator of economy, how economy is doing, and non-farm payrolls, which are the let's say jobs which are not related to farming or anything like that, but they are real jobs. I'm not saying farming is not real job, but real jobs in the sense the jobs we are familiar with, like bank manager jobs or uh, something like a janitor, So that's what um, that's what we will be looking forward to. Those three indicators, and I'll be using a software called Koyfin, Koyfin. It's free to people. It's available to everybody. It's just like Bloomberg Terminal. It's free and it's powerful. It's web based, so you guys can move along with me too. Now, first thing we will go to the topic we have here is how to predict sectors and find opportunities. How many of you guys have tried predicting sectors? Just a general question, and you guys can answer me anytime right now.
Not me.
Not you, okay? How about Ninja? Have you?
I apologize. I'm not listening. I'm
Okay.
getting on my computer now. Rob just got home. I'm sorry. I had to have a side conversation. Apologize.
You are perfectly fine, my dear. Okay. All right. Reverb.
I had a good feeling about solar, or do you mean like a broader definition of sector then?
That's fine. Any sector you like. Solar is a good sector. It's a subsector, but it's fine. It's still a good sector. So you how did you approach to it?
I had a handful of I guess it wasn't even solar, but I bought some Enphase and F-Cell and F-Tech and just kind of like green energy, renewable fuel stuff. I got into that around change the administration.
Okay. Well, okay. So that is a good way to predict a subsector because it's very specific, And I posted on election night. I said, "Hey, if Biden wins, I'm buying this ICLN and QCLN and TN ETFs. But if Trump wins, I'm buying Chevron, Exxon, ConocoPhillips, and Valero, and all those gas station brands." I was right. Biden won. I bought my TA and ICLN at very premium discounts. I made almost 3x money what I invested in there. I played options too in that one, but that is a good graph. But normally I tell people, if you look at my screen, don't be afraid of those red and green bands. They're just Bollinger Bands, but I modified them a little bit. There are sector ETFs. Each sector has an ETF. Each sector has particular companies or index which that ETF will track. And I like to follow spider ETFs. There are 11 sectors in this industry of trading and all that. Let's see. We have a first sector right here is XLC, which is consumer service sector. And if you look at this chart for 2 years, right? And I'll hide these bands. This is just a 2 year chart for consumer services sector from Spider. Now, question needs to be asked: what is in this consumer sector? So let me open my Fidelity page, and we'll go through that ETF. What are the top 10 holdings? Well, if you're mimicking my movements, feel free to open those top 10 holdings on your computer just to have a grasp of it. But I'll be opening a REM right here. XLC, which is the select sector consumer services for Spider ETF. It tracks that sector very well. That's why I brought up that example, right? So now I'm going to change my screen from the chart. Now, okay, before we change it, let me just draw a couple trend lines so we know what is the indicator and what I'm using. So this is the trend line. This is following alongside the right here. And this is the channel which is going through. So I'm just going to draw some Fibonacci stuff. Don't be alarmed by it. Perfect. All right. So we drew some lines, some charts, something on our chart for XLC. So we know what to expect, what not to expect. Okay. Now I'm changing my screen for XLC, communication service or consumer service. What is it? Communication services sector. Okay, here we go. Change screen. Everybody can see my Fidelity screen?
Yes.
Yep.
Perfect. So this is communication services sector, SPDR, which is part of ETF for communications. Look at the top 10 holdings: Facebook, Google again, Twitter, Activision Blizzard, and Walt Disney. So these top 10 holdings are 74% of this ETF, right? That means that totals 27 companies. Let me share my pop-out screen. Change windows. There are total 27 companies in this ETF, right? And this is sort of like an index, right? Fox Group is there, Lumen is there, AT&T is there, and this is all about consumer services. Sorry, communication services sector. All the companies which are related to communication or stuff like that. We don't know what's going to happen with each individual company, but we do know by charting or by using technical or fundamental analysis on that ETF's main frame or the main chart, that what we could expect, right? And let's go back to the chart again. Here we go. So I will delete these lines and trend lines and all that, but we'll do some simple math, simple analysis. All right, this is the chart for the COVID crash right up here for the same ETF you're looking, XLC, and I'll open a chart for. I will open a chart for Google Facebook because Facebook is the largest holding in this ETF, right? And we'll also open the chart for Google, GOOGL, because that's the second largest company in that ETF, GOOGL. There you go. Perfect. Now let's look at this ETF at February 19th. It's at the peak, only peak, and then boom, we have a crash, COVID crash, or whatever you want to call it. And by March 17th, 18th, we bottom out at $39. If I was looking at this ETF way before then the crash happened, I could have predicted just by technical analysis that this is a trend line right here. From this October line to right up here, this is a trend line. The break of this trend line would result in a bearish flow, and I would expect the price to go down this way, right? And that would be actually true. Let's look at our technical indicators at that time. We have MACD up here, which was curling down. We had RSI, which was showing us oversold or overbought territory right here. We had scarf trend cycle, which was just turning red at the peak. Money flow was showing that people are actually starting to pull money out of this sector even before we had this crash, right? Volume rock indicator was showing that there was lots and lots of negative volume compared to what it is on the balance volume, which is the net volume of any given at any given time, was going down towards negative. It went from 179 million to all the way to 134 million in just 4 days, and we had a break of this trend line. Well, this is a sign that this sector is going down. Well, if this sector is going down, what are the constituents of this ETF? We already saw Facebook, Google, Twitter, Activision. Those should go down with it, right? Because those are the largest holdings in this ETF. Let's have a look at them. This is the same chart right up here. We had a similar trend line in Facebook from October 3rd, and the break of that trend line would result in that trigger. So there we go. This is the trend line right here. The break of this trend line would signal that we are in a bearish trend. Let's look at indicators right at the same time. Right there, we have MACD, which is going below zero, which is a bearish sign. Histogram is showing the same. RSI is actually curling towards down points. It was not oversold or overbought anymore. It's moving towards the oversold territory. Scarf trend cycle, it's going down. Money flow index is going down. Volume rocker is pretty much flat. But look at on the balance volume. On the balance volume is going down. It went from positive 428 million shares to negative 358 million shares. That is 100 million shares downfall. People are shorting it for some reason or selling it for some reason. All right, let's do our hypothesis, confirm our hypothesis one more time with Google, which is the second largest holding in the company in that ETF right up here. And one thing you noticed or not, but I'll show you after we discuss Google up here. It is very strange, and it's a very great anomaly. So let's go for October 3rd on this chart right here. September, October. There we go. October 3. There we go. And this is the break of this trend line would be a good indication that Google is in a downtrend. Perfect. Google went into a downtrend. Let's look at our indicators. Same deal. MACD closed down below zero, bearish signal. RSI went down from all the way to 70 to all the way to 30, which is an oversold territory. Scarf trend cycle went down. Money flow index was going down. Volume rocker was pretty much flat, but we see some spikes up here. And look at the volume. On balance volume went from 39 million to all the way to 28 million, which is a 10 million downfall in the shares of Google. Class A. Bloody amazing. Let's go to the anomaly I was talking about. XLC. I see a gap up here, which you might notice right up down this way. The same gap has been seen in Facebook, right up around here. The same gap has been seen in Google. Everybody see that gaps? 1, 2, 3. Let me see if I can pull this chart side by side to grid view 3 by 3. So do you see this gap? 1, 2, and third gap right up here, right? Let's pull up our third company, which is Twitter. Twitter, I don't think we'll have a gap, but we'll pull Twitter anyway. TWTR.
Hi, everyone.
Hello.
Where are you posting? What are we supposed to be looking at?
You need to
You
look
see
at
my
the
screen?
screen. You click
Oh,
on the
okay.
live button, and then you can see his screen.
Okay.
Okay, so we'll draw a trend line in Twitter from October 3rd. So we have November, September, November 1st, October 25th. Well, we'll draw from November up in this case. And the break of this trend line would indicate we are in a bearish trend. Okay. Look at the gap in the Twitter when market hit, right? The gap was filled immediately, but there is a gap. So let me draw a gap right here. There we go. So when the ETF itself gaps down, which is XLC, it gapped down. It gapped down with Facebook also, Google also gapped down, and Twitter. These are the top holdings of this ETF, right? we are looking at communication services sector. And I can give you another example of this ETF too, which is let's if we can look at another ETF too. But the point of the story is you don't need to look at individual stocks to predict your sector. Just look at the main sector ETF, look at the technical analysis. Now, once you find the opportunity, once you see what's going up or down in that sector, go look into the top 10 holdings of that ETF. That's where you find your opportunities, right? And these are very good and real-time opportunities. Imagine we saw this break of the trend line on February 21st, 24th, and we come into the top 10 holdings, which is Facebook, Google, and Twitter. And we say, you know what, let's go and buy put options at the point. Let's go buy put options for Google at $1,300. We could have made $400 per option per share by end of the option expiration, which was March 19th. It would be a great options trade. If we shorted those Google shares, holy cow, we could have made the same amount of money anyway with more leverage, right? Same thing we could have done with Facebook and Twitter. We could have predicted the sector, what's going on in the sector itself, rather than waiting on our hands on and thinking, what the hell is going on? I don't understand what's going on, right? So let's switch back to the individual chart view so I can manage my thing better. Tab be right up here. All right. And now let's look at we draw a new trend line up here. So you guys can see the trend line drawn from this very bottom all the way up to here top. The break of this trend line will indicate we are in a bearish trend, right? So as long as this trend line is not been broken, we are perfectly fine in an upward bull trend. And if this ETF is in bull trend, what does that mean? Those top 10 holdings which we look at, which is Facebook, should be in the bull trend too. But Facebook has a different bull trend than the ETF itself. So Facebook broke its bull trend from here onwards to here. So Facebook broke its bull trend and Facebook is in consolidation zone right now. But it has started its bull trend back again, in my opinion. Let's go and look at extend this trend line up here. Now this trend line which was a support, now acts as a resistance. So this is the first opportunity I have found. I know my profit target is around this trend line, 329, 330, and my buy price would be around 290, 290. Now this is a long-term swing. This is not a swing which I'm looking forward to hold for 2 days or 3 days. No, this is a long-term swing. This is not a short-term swing. Let's go and look at Google. Google is in a trend. Google has bloody so many gaps. I hate it, but what are you gonna do? Look at the trend line in Google. We broke the trend line in Google right up here around this part, right around here. We broke the trend line. We went into bearish trend, but we started a new trend. And we could have gone into the trend, and we could have still bought it. So this is a trend which has not been broken yet. We have still a couple gaps up here, but I'm still a little bit bearish on Google. Okay, let's look into Twitter. Twitter is gapping up massively for some reason. And these gaps will be filled shortly looking at the volatility in the market. The Twitter head was in a bull trend right around this time. It tried to break the bull trend many times, but was not successful at all. I think it was successful a couple times right around here and around this point. So let me draw a circle where it was successful to break those bull trends. One. And second circle is around there. These are the 2 points where it was able to break the bull trend, but bull trend continues, starts again. And I'm still bullish on Twitter right around this area. And we are not far away from our trend line where we can bounce off, right? So this is the first ETF. Any other ETF or sector would you like me to look at? Because I want to be more organic in terms of my research with you guys. It's just fun, bloody fun.
Can you look at the energy sectors like oil, energy? I've been looking at. Okay, awesome. Thank you.
So there is an ETF from Spider. It's called XLE, which is the energy sector ETF. And looking at the ETF, this is a 2-year daily chart of the ETF. I can go to 5-year weekly charts because I like those charts. And this is a 5-year weekly chart of that ETF. look at the ETF is in a downtrend since long time now. Since almost 2017, this ETF is in a downtrend. Do you know why?
Is it because we're moving over to energy efficiency, ESG stuff?
Well, it's 1% of the reason, but 99% of the reason is the crude oil prices. Crude oil prices are going down ever since 2015, actually, right? So if I even go from 5 years to, let's say, 10-year time frame and look at that, this is 2014. Look at the crude oil prices. It was a crude oil crash. Crude oil went from $150 a barrel to $50, $60 a barrel, which is a huge downturn in crude oil. And ever since the ETF is going down and down and down, this is a direct correlation is with the crude oil rather than the correlation with the ESG. But it is a good observation. Maybe in 10 years from now, that would be a main reason this ETF will go down again. People are moving towards more ESG stuff. But it was a very good observation, at least. But yeah.
So with this ETF, right?
Yep.
XLE is one you listed previously. It looks like it is curling back up. Would you suggest that we should get in it, like oil is something we should look at, or no? Because
of course, because if you look at the price of crude oil, I'm looking. If you know me, I traded crude oil back in December, made a ton of money because I knew the crude oil was in a bull market. I bought crude oil at $34. I bought 52 contracts for futures, which is roughly around 100,000 barrels of oil I bought. And I sold crude oil at $59 per barrel. So my just profit, if I consider the profit, if you do this basic math, I made $25 per barrel, and I had 100,000 barrels of oil with me. That I made profit on, right? And the simple reason is I was doing the same analysis as you were. Look at back in December. Look at the chart, right? I'm looking at the weekly chart. This chart right up here, this is a zone. This is a double bottom. I did the same analysis on this ETF. One bottom, and this is a second bottom. And I saw I got my confirmation when the price was broken above this resistance level of $37, $38. I went back, put my buy orders, oil hit $34, got my order filled, and rode all the way up to $59 because I thought $60 is a good level for the crude oil to break, and it would never break that. But hey, what do you know? $67 was the highest price it ever went to, right? So this was my analysis, which yielded me into tremendous amount of profits. Now let's look at the top 10 constituents of this ETF. I'm not going to share my screen right now. I'm just going to say it out verbally. It's Exxon, Chevron, ConocoPhillips, Schlumberger, EOG Resources. The major shareholders in this ETF is Exxon and Chevron. Exxon is 24% and Chevron is 21%. Let's look at Exxon and Chevron on the chart. We will going to look at XOM. Next one we will going to be looking will be CVX. Oh, by the way, I bought CVX and sold options because I was bullish on CVX. And Exxon, where are you? All right, so look at the chart of Exxon and look at the chart of the ETF. I'm going to go back again and XLC. I want to look at XLE. And look at the chart of this ETF. I'm going to delete these two blobs. Now we are going to turn on the tab view and compare that. You will see those charts are very much similar. And I would, in my opinion, you will enjoy the charts. Look at the charts. So I'll zoom in this one a little bit. Same thing up here. And same thing up here. So up one is XLE. And next one is Chevron, Exxon, and this is XLE again. But I can put ConocoPhillips, which is the next largest company up in the file. So let's put COP. And look at the chart of these companies. So much similarity. Every single chart has a double bottom. Look. First bottom, second bottom. First bottom of the ETF, second bottom of the ETF. First bottom of the ETF, second bottom of the ETF. Look at ConocoPhillips, first bottom and second bottom. And they're identical. They happen at very same dates. Right? So if I was just monitoring these ETF and I see the double bottom opportunity, I could have gone and bought call options on all of them, Chevron, Exxon, and ConocoPhillips, and I could have yielded massive gains. Right? Look at if imagine if I was in October, I buy 1 month expiration options at that day. Let's do a basic calculations. Price measurement, we come and buy at October 30, we buy November 30 expiration options at a strike price of $70, right? The price of Exxon or Chevron is at that point is $69. And we wait for 1 month, right up here. November 30, where are you? Here you are. The price of Chevron at the point was $90. Our options could have been $20 in the money, $20 bloody dollars, and we could have paid a premium of what? $3, which is still worth it. We still made $17 per share buying their options contract because we did a macroeconomic analysis of a sector by looking at the ETF. We predicted the sector just by looking at it, right? If you switch back to the tab view, I use many indicators to confirm my analysis, but you can use just MACD. So let me MACD and RSI rather than using all the fancy indicators I use. Let's just use MACD and RSI. I'm canceling out the indicators. Look at the MACD and look at the RSI at the same time. I'm going to make them bigger so you guys can make a calculated decision. Look at around October 29. That's when the second bottom happened. RSI was oversold. MACD was crossing just into bullish intervals. Histogram was showing bullish signs. That was a confirmation. That is a pretty good confirmation. Even if you don't have anything on the chart, just like my chart has nothing on it right now. That is still a good, very good confirmation, on my opinion, right? And look at that. I zoomed in even more. Same point. This was a buy zone right around this area. And we have a sell zone or profit-taking zone at three times. We had first profit-taking zone around this here. Let me draw a rectangle. So this was the first profit-taking zone, and we have a second profit-taking zone around this point. 2 consolidations we saw. This was 2 profit-taking zones we had at the time. And this is just done on macroeconomic analysis, right? There are many ETFs which we can track, but I like to track just the sector ETF. I'm going to share that screenshot in the chat right now. Hold on. I'm just going to type them down in the Cave of Doom. So if you go, oh, there you go. Yeah, Reva, perfect emoji. I like the movie, by the way. That's a good one. XLC, XLY, XLV. These are the sector ETF. XLP. We have XLE. Then we have XLK. We have XLB. We have XLI. We have XLF. And we have XLRE. These are the sector ETFs we should be covering every single Sunday. This is your research. This is
Liam, I don't know if you can hear us, but we've lost you.
Sunday.
Liam?
Yes.
Okay, I think you might be back. Internet glitchy, maybe?
Yeah. Looks like it. Can you hear me now?
A little bit. You're a little bouncy, but is there a way? So we want to label these sectors for what they are. So XLE is energy. I'll go ahead and edit yours, and I'll start editing them as I figure out which ones the sectors are for you.
Correct. There should be 11 ETFs right now. And this theory applies to every single ETF out there. If you want to look at ARK ETF, go look at ARK ETF. Only the top 10 holdings move the bloody ETF. Only the top 10, because there's so much weightage, so much weight on this top 10 holdings, right? So, in my opinion, when I'm doing my macroeconomic analysis, I don't give a shit about what others are saying. First of all, I go look at the ETF or index, which are tracking those sectors. And then I would move forward to the individual stocks and I will say, hey, if this ETF is moving 1%, that means somebody is moving this ETF. Let's go find that mover and let's go bet on that moving asset rather than betting on the entire sector, right? That is more lucrative. There's more leverage up there.
Hey, Liam, I have a question.
Yes.
I have Brock here with me. He works in the oil industry. So I think going back to what Elise just said about the EV sector and how that's going to affect the oil stocks, are you saying that we just go by the charts and we don't look into like Biden canceling the pipeline and stuff like that?
Well, so that is a very good question, Lise, and we think about those and we look at that. Biden canceled the pipeline around what, January,
Yeah.
beginning of the January, February. Look at the rally in that ETF since. I'm still on XLE, by the way. Give me the date when Biden canceled it. Let's say February 5th. Since February 5th, that ETF has gone up 26%.
I think it was
So
February.
we were looking at that at January 1st, as soon as he got in, and the first time that he spoke, he canceled it. He did whatever it was, 20 executive orders against all of that. I worked out there, and I've worked with the best of the best of the best. I've worked for Husky. I've worked for all of them.
That was
All of
5
them.
days
It
in.
is,
So it would
it
have
is,
been,
yes, you are correct.
I'm just,
You
what
are
I'm,
correct. I don't believe that any of this stuff is ever going to make grounds as long as the Biden administration is in.
and what about the EV sector? You're saying that's not going
So
to,
the EV, so on my guidance, I worked in automotive for years and years and years. The EV sector is saying that, okay, so you can have an EV car, but you have to have a subscription.
well, you guys, hold on, because he's trying to show us charts. We're not,
I know, but
Exactly,
are we
but-
starting charts
No,
on
that's my
something that is
point.
dead?
no, listen,
No, hold on.
my question is, do the charts override the situation, like the political
Yeah,
situation,
because
or?
yeah, like
you understand what I'm
I don't believe the charts
So-
are going to do any better than Bitcoin charts.
So you guys, I want to steer this away from a debate about EV versus oil long term, because
Okay,
Yeah, I
perfect,
understand,
perfect.
I understand.
that's not what Liam's trying to show us. He's showing us that even with Biden being elected, we could have made a shit ton of money in the last couple months. This isn't about long term. This isn't about pipelines. This is about just, can we make money by looking at these charts? So that's, I think, what he's wanting to show us. So let's keep that in the direction of where we're headed.
Thank you, all of you. But that's exactly what I'm trying to do. And my friend with Liz, at the end of the day, whatever the sentiment of the market is, you can see that on a chart, right? And I can tell you a ton of stories which I just saw the chart first, and then I heard the news. For example, when Brexit was about to happen, we didn't know when Brexit was about to happen. We just knew Brexit was going to happen. I was looking at the chart of pound and euro currency pair, and I said, you know what, something horrible just happened. 20 minutes later, we got the news. Brexit already happened. People voted to stay out. It was a chart which got us into, it was a chart which gave us the confirmation, right? So there could be many reasons. Chart at the end of the day, or a price of any commodity or any security on the stock market, at the end of the day, that is the reaction to people's beliefs. Stock market is nothing but a trust machine. If you don't trust in a security, it goes down. If you trust in security, it goes up. You buy it more, right? So I understand your perspective, but my perspective is very simple. I can see the chart and I can predict what's going to happen unless there's a big anomaly which I don't see on the chart. That, for example, Biden was an anomaly, but we all knew that Biden was going to come, the solar sector or the EV sector was going to get a boom, and energy sector was going to go down. It was not a surprise, even though energy sector gained. Since Biden announced his presidency, not announced, since Biden won, let's say November 1st. Since November 1st, when Biden's announced the winning, this ETF, XLE, is up 101%. 101%, people. In Biden presidency, it was not that much up in Trump presidency. Actually, in Trump presidency, the ETF went down to 42%. As soon as Biden comes in, even though he bloody cancels the pipeline, the ETF is going up. What's the reason? It's not the presidency of Biden which is moving this ETF. It is the prices of crude oil which is moving this ETF, right? So we need to understand.
The opening up of people are expecting Biden to be able to open up the economies by the vaccines. So
Correct.
yeah.
Correct. That is also a good point. But hey, my friend, you bring a very valid point. Fundamentals are important. I'm not saying you neglect them, but we are here to find the opportunities. This is the way you find opportunity, and then you can add on your research. More research you have, more concrete research you have, the better it is for you. And I appreciate you bringing the point up to me. I really do. Thank you.
You're welcome.
Okay, let's move on to our second segment, which was we are going to predict what I forgot. I'm sorry, I lost the stream. We are going to predict. Oh, the economic indicators. Yes, 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 yes. So we are going to predict the market, and we are going to use economic indicators to predict that. So let me create some charts. Meanwhile, I'm open for questions from you guys. Yes.
So Liam, I guess I'll ask a question.
Yep.
I bought JPM, and I bought some of these. I bought Caterpillar. I bought some of the stocks that you had mentioned, and one of my friends had mentioned how high they were at this point, so they wouldn't have gotten in them at this point, because we're looking for low bottom, basement stuff. Can you address like entries on, because you were saying JPM, Caterpillar, some of these others were really good. Ash Boya, those. How do you address with the charts them being so high? Like even with oil right now, look how high that ETF is. Like would it be still an okay time to get in, or is it a bad time to get in?
Well, that is a very good question. Let's pull up the chart of JPM and Caterpillar. So I'm going to pull up the chart for JPM.
But I don't want to distract you from your other charting. That was just my question, since nobody else was asking questions.
Yeah. Well, no, that's a good question. I finished putting up PMI on my chart, and I'll put CPI and non-farm payrolls in a minute. But it's loading. It's taking some time. But meanwhile, it loads. I can answer your question. Look at JPM from its value when it fell down. It fell down from $137.40 all the way up to $78.67. This is a normal growth in this stock. And if you want to see look at the 10-year chart, right? Look at the 10-year chart, and I'm going to draw a trend line. Do you see what I'm seeing?
Yeah, so I'm seeing that it's not as high as we think. It's just a normal trend line
No,
for the 10-year.
it's a fair value. We are scared because we see this picture. That's why we are scared. We don't see the big picture, right? And the same story goes with Caterpillar. Caterpillar right now is fair valued. It's not overvalued company. Look, this is the chart of Caterpillar right here, and because of the boom in infrastructure, we need infrastructure right away. Look at the spend line. Caterpillar is perfectly fairly valued right now. It's not overvalued company. Look, we are scared because we see this chart. That's why we are scared. We need to see this chart right up here. We are in this game for long term rather than short term analysis, right? So as long as we have the Caterpillar, as long as we have the infrastructure need, people will need bobcats and other equipments to make and move earth, and we will have Caterpillar in existence. And Caterpillar is also a major defense contractor. Most people don't know that. They manufacture engines and chassis for the M1 Abrams tanks. So they're not going out any day sooner, in my opinion. And they have good dividend too. So if you don't make growth, you make dividend, at least dividends, which is a good thing. And in my long term portfolio, I don't like to buy a company which does not pay me a dividend. Pay me one cent dividend. I'm fine. Just pay me. Appreciate my investment. That's all, right?
Thank you, Liam. I appreciate that. That addressed my concern about buying at these highs. I appreciate that.
Yep. Right. Let's move on to PMI. Okay, here we go. Everybody can see my chart. Everybody can see Coifin. This is Coifin right up here. It's Bloomberg terminal for people like me and you. Now, this is a chart of PMI, which is Purchases Managers Index. I'm going to delete all this stupid line. And look, it shows you it's so okay. When let's go with the definition of PMI. Okay, PMI is measure of prevailing direction of economic trends in manufacturing. That means if more manufacturing is there, that means what? People are buying goods, people are willing to spend money, right? That's what PMI is. And the value and movements of PMI and its component can provide a useful insight to business decision makers, market analysts, and investors as a leading indicator of overall US economy. This is important. It is a leading indicator of overall economic activity in the US, right? I'll link this article in the chat or in the Doom, and you guys can see. Often it's free, yes. It's a powerful tool if you know how to use it. If you don't know how to use it, you might not like it at all. I love it. I learned how to use it. It's bloody amazing. All right, let's move on from Python. Sorry. So this is PMI. Look at the PMI since for 2021, and I keep on scramming it. This is the second year of bull market. People think it's high valuation. No, look at the bigger picture. You think it's high valuation because you saw the same stock 1 year ago at $20, and the same stock is fairly valued right now at $80. So you think in back of your brain, this is overvalued. 20 to 80 is overvalued. No, we had a correction. And people over exaggerated that correction, right? Right now, market, in my opinion, is fairly valued. We should not be worried about it. And you need to understand my point. I'm talking from long-term perspective rather than talking about short-term perspective where market is overvalued. I see market is every time market goes to a new high, it's overvalued in short term because you don't want market to go that high. But looking from a long-term perspective, market is fair value right now, right? And the good indicator is PMI. This quarter's PMI, look at that. This is April of 2020 and look at April of 2021. The PMI has constantly been going up and up and up. People are buying more goods than ever before, even in this online market, right? Let's look at our another indicator we have is CPI, which I like to view CPI every single day. US inflation rate. I'm just going to go price and volume data. Look at the inflation. Inflation has been normalized. People don't believe me. This is sheer stupidity if you don't. And this is my strong opinion. But look at this inflation. This is inflation in 2017-16. It rose when Trump came into power around 2015-16. Inflation value rose from 0% to roughly around 2.79%. And it's stagnated. It's been stagnated at that level around 1.7% ever since. Inflation went down very much massively. The CPI index went down very much massively around the June area. That's when we had a stronger rally in the stock market and we also fell down. But look at inflation. It's under control. I believe inflation should rise because Fed is printing so much money, right? But that inflation is not going to affect us until 2022-23 because the problem is we are in a bubble, right? And when bubble begins, you cannot short a bubble. It's just irrational. People look at the graph of stock market in 1999, all-time highs, and Nasdaq was higher than ever before, right? You cannot short it because people who shorted that bubble were right to short the bubble, but they were wrong when to short the bubble, right? So we are in an inflation bubble at this point, rather than we are not in a tech bubble, or tech is everywhere nowadays. So it's irrelevant to say that we are in a tech bubble. No, we are not in a tech bubble. Look at the PE ratios, right? If I just look at the PE ratio of U.S. stock market, I don't find PE, but price to earnings maybe. Right, I cannot find it, but PE ratio of U.S. stock market is roughly around 35, 36 right now. You are paying $35 to someone to create $1 of earnings, right? And this is normal in terms of inflation, in terms of growth. This is normal. So I don't believe we are stagnant, or we should be worried about long term. No, we should not be. We should be worried about that inflation ball, which is going to pop in 22, 23. in my opinion, and that's going to have a major correction. That would be a good buying opportunity for us long-term investors to invest money and keep cash on hand and buy something at a discount when Spider will be around 450, 460 mark, and Spider falls to back to 380. That would be a good discount buy, right? So that's what it is. There we go. CPI, basically, if you look at the key takeaways right now, is measures the average changes of prices in over the time. In simple word, it measures inflation, right? What you were buying in 2018 and what you were buying right now is cost the same or cost the difference. That's CPI basically. And how CPI is used, it is an economic indicator, as I said, right? And you can by using the CPI, you can measure how government is performing accurately. If government policies are favorable to people, CPI inflation will be under control. But if it's not favorable to people, if it's favorable to businesses and all, CPI should be out of control by then, right? So it is a complex indicator. But if you study this indicator once a month, this indicator comes out once a quarter, right? Before GDP comes out, these all indicators comes out in the values. You need to study the report. At least read one report from CPI. These reports, you might ask, okay, where do I find these reports? These reports are available to you at your broker's platform. TD has it, Fidelity has it, Schwab has it. Major brokers, good brokers have these reports in their archives. You can just go and read those reports, or you can make some sense out of it, or you can just Google these reports. These are public archives, right? But I like to go to my broker and rather read the report at my broker's page rather than going somewhere else. Okay, so question about CPI, known farm payrolls. Okay, known farm payrolls are economic indicators. Again, it is an economic indicator. If you look at the key takeaways here, they are jobs. Basically, they are job numbers. How much unemployment is in the market? How much employment is in the market? That's what non-farm payroll says. But the data from non-farm payrolls collected by Bureau of Labor (BLS) put into employment situation report, which also includes unemployment rate. Now, if there's a high unemployment rate and the economy is doing good, there's something wrong with government policy. It makes no sense for such high employment numbers in a good economy. That means it's a leading indicator saying there's something wrong and market is coming down, right? Right now, if we look at non-farm payrolls in COIFIN, I was not able to find COIFIN's non-farm payroll, but we'll see. Non-farm payrolls. There you go. United States non-farm payrolls. We'll go for graph and volume. Look at the non-farm payrolls. It's been flat as ever before. It's back to normal right now. And most people, we are like, okay, look at this crash when there were so many jobless claims, right? Almost 20,000 people lost their job every single hour in the United States back when this pandemic happened, right? Now, look, people are just getting their jobs as stable as non-farm payroll as stable as ever before. This is the number of 2019 January. It's around 28, 29. Look at right now. It's around $49. $49. When I say dollar, it's the unit of the index I'm talking about, right? So these are the three indicators we should be studying to predict the market. PMI is the best one I like. CPI is the second one, and non-farm payroll. If PMI goes up, CPI goes down or adjusts or stays neutralized, and non-farm payroll stays neutralized. That means the economy is going to good. Market should go up, and market will take that into consideration. I don't have advanced charting available to me, or I would put all these three indicators in Spider, and I would love to show you. But if I find a chart with those three indicators and Spider together, I'll post it in the Cave of Doom, and you can see the relation between them. As soon as PMI goes up, Spider goes up. As soon as PMI goes down, Spider goes down. It basically follows it, right? And that's how you can predict the market, reading just basic reports rather than focusing on charting and all. This is fundamental analysis, by the way. This is purely fundamental analysis. I'm giving you a chart because it's easy to process the information rather than looking at the table of contents and try to analyze what's going on in the market, right? I think that should be it. But for the people who are willing to play options, I have some treats for you guys. If you guys are interested in those option plays, I'll post those option plays soon in the Liam's Insight, or no, not Liam's Insight, in the Liam chart patterns. Those option plays right there, and that should cover you guys for good amount of week. I think that is end of this thing. I discussed economic indicators. I discussed these sectors and how to find opportunities, how to predict market. I think that this is the end of the stream. Oh, this is far away accurate. I thought I would take longer. But yeah, I'm open to questions. Feel free to ask me anything about. If you want me to review a ticker for you, yeah, sure, go on. I'm here for you.
Hey Liam, this is David. David Wong. Hey,
Hey,
so
David.
the non-farm payroll
Yep.
chart that you're looking at. So
Yep.
you're saying that this chart is the good indicator to tell if good prediction, I guess, a good indicator of the
Yep.
market's going to go up or down.
Yep.
Does it coincide hand in hand with the CPI, or the CPI will be completely different? The consumer price index.
They all work in a synchronous rotation, right? So if you look at the PMI, I'm just googling the chart, PMI, CPI, payroll. Uh,
Liam, are you talking or did we
Yeah.
lose you again?
no, I'm talking. Can you hear me? Hello?
I can hear you now. Sorry.
Yeah, we can
Okay.
hear you.
Okay. So answer to your question, David, is those you need to chart CPI, non-farm payrolls, and PMI in one chart with Spider, right? If you can do that, normally people can do that on Coifin. I need to learn how to do that on Coifin, but I have seen I normally use other people's chart when I'm trying to study that three things, right? And it is important to know what non-farm payrolls are, because even if you're a good economy, if you're a good purchasing index, if you're a good inflation rate, why the CPI non-farm payrolls is going down, right? It should be going up. So if it's going down, it's an indicator that something's wrong with the market, and we need to find what's wrong with the market and manipulate the possibility and make money out of it.
Right, right. Okay. Yeah, that makes sense. Yeah. And another question I have for you is for the sector,
Mhm.
which indicator or which index do you normally use to that is, I guess, best describe the overall health of the tech sector?
Nasdaq 100.
You use Nasdaq? Okay.
Yeah. Yep.
Okay, because that's what I use also. I just wasn't sure what, if you have another one that you use besides that specialized in tech rather than the NASDAQ overall. Okay. Yeah. I mean, I guess that the NASDAQ is pretty good overall because
Right.
that's where all the big boys are with technology. So,
If you
okay.
if you don't want to use Nasdaq 100, use Nasdaq Composite Index.
Okay, the composite.
Yeah.
Yeah.
It has more companies, so it can give you a broader sense of the market.
Yep, yep. So one thing I noticed recently for those that play SPACs, especially the SPAC warrants, I've noticed that the SPAC warrants fall before the big techs correction.
Yeah.
Is that do you know if that is a typical trend for a lot of the SPAC warrants? Because I want to look at an indicator that um, give us a better guide. I know Elise and I, are we're pretty heavily into SPAC warrants, and the
Yep.
recent I call it a crash for the SPAC warrants. Was that I thought that it follows something similar to the small tech, the small cap tech, but it doesn't actually. And so I need a better indicator, to give me a better gauge as far as the movement, of which the direction it's going to go. And because the SPAC warrant has such a short history, you don't really have enough trends to really look at. So my best bet is probably an index of some kind is what I'm leaning towards, and I think the tech is the one to go with. And I'm not sure if your experience also tells you that is the correct place to look.
Animals, there is a spec index from, let me see, from a company.
So
Spec index.
so the SPAC index that is the ETF, there is a SPAC ETF, but that is not David, that is not for us because the SPAC ETF is post DA SPACs like CCIV and QS, ones that even have been that are former SPACs. So
Mhm.
I would not look at that ETF for us. Honestly, there's nothing. there's no indicator for us other than we have to realize that I think it follows the Russell because it is small cap, very, very innovative growth tech. And so I've been looking at the Russell.
Mm.
Yeah. And Russell is a good indicator. Like right now, Russell is the strongest performing index, which I'm not surprised because small businesses are going up compared to the big businesses. So yeah, I'm invested into Russell futures, by the way, full disclosure.
Okay. Yeah. So yeah, the Russell is all the small cap resides, right? So that would make sense. Yeah, I probably would do a little quick comparison between the Russell and the Nasdaq index to the
Yep.
some of the specs we've been kind of you know heavily entrenched in, just to get indicators, because we do need to track it better, in my opinion. Right now whatever we're using is not working as well as I'd like it to be, in my opinion. But
Right.
they're recovering. I mean, it's not like it's gonna go away. The SPAC or the SPAC warrants. So
Yep.
okay.
So I got David into SPACs, Liam. So
Yeah,
now
you did.
the poor guy's trying to figure out how to recover. But honestly, the way we're doing this is because they're empty. They're not trackable. They're nothing until there's something. And when there's something, that's when the ETFs start tracking them. But we sell when they become something. So it's just yeah. So
True, very true.
Hey, Liam, I had a question. It's somewhat unrelated to what you've been talking about today. I know I
Sure, that's fine.
mentioned AMD to you a bit
Yeah.
ago. Uh, I'd be curious to know what your opinion on what it is that's holding back AMD. I mean, they've beat the earnings estimates for the past 3 quarters. They've acquired a company that specializes in custom chips specifically for artificial intelligence in data centers. They have beaten Intel on CPUs. They've gotten close to beating NVIDIA on their GPUs. I mean, they're a company that is been around for quite some time and been kind of quiet because they didn't have technology to compete with other companies that were their competitors. And now they are definitely competing with both NVIDIA and Intel. So what do you think
And
it is that's kind of holding back the stock price? Because they're at $78, and that is, in my opinion, very, very undervalued.
yeah, and see, look at the chart of AMD in 10 years. You see the rapid growth in last 2 years. That's what's holding it up. Because every time you see a rapid growth, like if I were to go to weekly time frame, look at the weekly time frame. This is the first leg up, right? Let
Right.
me draw a trend line so you can see it better. This is the first leg up. We need a consolidation before the growth tends to cure itself. And then we can start our journey for the second leg up. And the second leg up, in my opinion, would give us a very beneficial point where we can draw our trend line up to 150, $160. That's what's stopping AMD, in my opinion. Nothing else. It's AMD itself which is stopping AMD. Nobody else is stopping AMD. It's just the rapid growth. People are trying to get out of the stock, get profit out, and all that.
Gotcha. Okay.
But yeah, I see the stock going around $150 easily. To be very honest, this is a very very undervalued company. Hey, Ayman, how do you pronounce your name? I'm sorry if I butchered it. Probably is he here?
Oh, hi, Liam.
Hey.
Hey,
Yes.
sorry, I was on mute. Yeah, you pronounced it correctly.
Perfect. Perfect. Well, it's a
Yeah,
pleasure meeting you, Mike.
I've been listening. I'm actually outside, with a lot of family members.
Yeah.
So that's why I'm just listening on mute.
Okay. But I
Yeah,
appreciate you joining in. Thank you.
yeah. Thanks. Good information.
Yeah. Well, if anybody, hey, buy low, sell high. WTF? Oh no, it's Ninja who has the similar. Okay. Okay, I'm going crazy. But ask me questions. I'm here. Oh, how about your trading plans, people? I need to follow up on that. What's going on with your trading plans?
Right
Can anybody
now,
hear me?
yeah. Right now, I'm just waiting on the next leg up. I
Okay.
got quite a few of your the 14 that you listed for the 35% gain. Just waiting
Yeah.
for those to hit one at a time and then find something else.
Okay, good. I posted another 35% gainers. I posted 4 more. Did you see that?
I did. I just don't have any more cash to put into more things.
Okay. Okay.
I have.
Rewab, isn't there is a concern with the semiconductor supply that might hurt them?
That
Is
was
this?
that was re AMD.
Yep. I know, but that it is hurting everybody. But this, if you look at AMD, it's hurting everybody. So it's expected. But what's stopping AMD? It's AMD itself. The growth rate of AMD is so high that it needs to consolidate. It needs to cool down before it can go higher and higher. But good observation, Reverb. Good observation.
Do you ever try to chart these against each other within the sector, like AMD versus Intel versus Nvidia, like just to see who's running hotter in comparison to the laggards that you might hop on?
I do. So I compare the price for 2 stocks at a time. So right, if I'm comparing AMD, I'll compare INPC up there. And you will see the chart of Intel and AMD, which is, so you can see the Intel is lagging behind AMD, right? And if I go and if I make the chart even more higher, you can see the Intel is lagging way behind AMD. Now, Intel right now at the point is just start to go above AMD right now. The green line which you see is Intel, by the way.
Well, with AMD, that's only a portion of what they do. They also have GPUs. Intel has GPUs, but they're nothing to speak of. They're
Well,
pretty
they suck.
terrible. Yeah.
They suck. Yeah.
So, another one that you would have to compare it with is Nvidia.
Yep. So let's see if we compare with NVDA. Yeah. So let me make the lines even thicker.
Well, that's interesting. Nvidia is very close.
Yep. So NVIDIA and they both are very close. If you go back to, let's say, 4-year time frame, so you can see Intel is lagging since 2020 May, right? And look at NVIDIA and AMD, they're growing side by side. So it's interesting to see.
Does market cap play into this at all? Because Intel's, I don't know about Nvidia, but it's way bigger than AMD by market cap, so it should grow less reasonably, right?
Yeah, so if I'm looking at 2020, if I look at the calculations from 2021, this is from 2020, so I need to go back to 2021, January 4th, to see the latest data. There you go. So if you look at the latest data, which is so AMD is lagging, Intel is leading actually. If you look at compare the data from 2021, right? But if I go back to the data where I want to compare it from the pandemic crash, which is February 19th, look at Nvidia is leading, AMD is following Nvidia, and look at Intel, it's lagging ever since. You see that? And let me change from candle to a line chart so you guys can see that too. Right? The middle one is AMD, the top one is Nvidia, and the bottom one is Intel.
Yeah, that's an interesting perspective. If you look at stock price alone, it doesn't look like AMD is gaining the ground that it should.
No.
But this, it kind of looks like it is actually gaining the.
Yeah. Yeah. This is a long-term perspective. You need to look from long-term rather than short-term. So that's when you find good opportunities, right? Looking from the perspective of October 2018, look at AMD. AMD is a way better investment than Intel or Nvidia at the time, right? Look. This is October 2018, September 2018 actually, right?
Also, now that I think about it more, another thing that is probably holding AMD back a bit is the crypto market. Because right now, NVIDIA is king of crypto mining. Mostly because development of mining software.
True, very true. But hey, hopefully I think you guys gained today from today's stream. Today was not so I was not so aggressive. I was just mild and okay. I'm not feeling well, but I wanted to do this stream.
And as always, I'm sure we all appreciate it. I know I do.
Yeah. Thank you. Thank you. I'm going to stop streaming.
I'm gonna stop the recording as well.